Want to know how to minimize your tax liability? You're in the right place. Tax planning is a strategic approach to managing your taxes. It's all about understanding how to work within the tax laws to reduce your tax burden. It's an essential tool for long-term savings and risk reduction. Stay tuned as we dive into some effective strategies to minimize your tax liability. First up, it's all about maximizing tax deductions. This strategy involves ensuring meticulous documentation and accurate withholding of taxes. Proper record keeping is your best friend when it comes to proving your deductions. Now, let's talk about charitable contributions. They're not only a great way to give back to your community, but they can also reduce your taxable income. But be careful, there are specific requirements for deducting these contributions. So it's crucial to know the ins and outs to make the most of this strategy. Remember, every penny saved in deductions is a penny earned. Now let's talk about choosing the right deduction method. There's a choice to be made between the optional standard deduction or the itemized deduction. Your circumstances, such as your income level and personal expenses, will determine which method is most beneficial. Choose wisely because the right deduction method can save you big bucks. Avoiding tax on non-taxable income is another smart strategy. It's essential to understand that not all income is subject to tax. Missteps here can lead to unnecessary tax liabilities and penalties, especially with unappropriated retained earnings. So be mindful of what's taxable and what's not. Lastly, don't forget about utilizing tax treaty relief. This refers to the reduction or elimination of taxes on transactions involving residents from countries that have a tax treaty with your own. Essentially, it's an agreement between two countries to avoid double taxation. Tax treaty relief can be a game changer if you qualify. To wrap up, we've taken a journey through some key strategies for minimizing your tax liability. We've learned about maximizing tax deductions through proper documentation and withholding taxes. We've discussed the importance of choosing the right deduction method, either the optional standard deduction or itemized deduction, based on your individual circumstances. We've also explored how to avoid taxing non-taxable income and the importance of monitoring unappropriated retained earnings to dodge penalties. Lastly, we delved into the potential benefits of utilizing tax treaty relief for transactions involving residents of tax treaty countries. Remember, tax planning is not just about saving money, it's about smart money management. Thanks for watching.